Good evening, I'm Giuseppe Basile. I'm the analyst and trader you can find at the website www.fibstalkertrading.com. I also post regularly on Twitter using the @fibstalker nickname. Good evening, today is Sunday, August the 2nd, 2015, and it's 11:30 p.m. time in Toronto, EST. In this video, I'm going to offer you a review of the 14 markets I follow in the next 15 minutes. I'm going to analyze weekly and daily timeframes of these markets, and I hope this can help you in the coming week, can help you identify high probability trades and actually understand what's going on in the market and how algorithms are actually positioned in these markets. I also want to remind you that I'll soon launch my September 2015 offer for the coaching program, the Fibstalkers Method coaching program. And in this coaching program, I show my students how to take advantage of algorithms and how to time using the Fibstalker proprietary technique, which is called Fibstalking timing, which actually is used to study the sequence of measured move, the opposing sequence of measured move on top of area of support or a level of resistance or below level of resistance. So if you're interested, you will find more in the emails I'm going to send out in the coming days and weeks. So let's go back here to what happened this week, and you will remember that this market, the euro dollar, this is the daily time frame of the euro dollar, had traded already the 111.20 level here, which has a target at 106.56. So last week we saw on Friday the market moving higher into that level. It didn't make it into the level, it went 8 pips below, but I will consider, given the circumstances, I will consider that level traded again. So at the moment, this market has shown twice that there is resistance at that 111.20 area, and so I anticipate this market to continue lower this week. So any retrace into the all the way halfway back here, which is 110 level, should actually propel this market lower into 1839 first, and potentially into 107.55 for starters. And if that's the case, there's this larger setup at 111.20 here that could push price into 106.56, as we mentioned last week as well. Moving to the S&P500, this market has been moving on top of this 2036 level. You will remember that there was a reaction, although very, very short-lived, at this 2097 level, and then price also broke the all the way halfway back here into the lows in July, beginning of July here, to highs the 20th of July. As you can see, this level has broken, but also the opposite level has broken. So this is kind of typical situation of a lateral market, and we knew already that this market was moving large. So what happened now is that this market could actually get into 2080 here this week and start respecting this level. And if that's the case, we could see either a continuation, a lateral continuation, or a market that resolves on the upside. The market could actually also retest to 2036, so we have to keep an open mind on what can happen in these conditions to this market. But a retest on 2080 with the application of Fibstalking timing technique, successful application of it would actually mean a continuation higher starting from 2080. The dollar index, let's have a look at it. The dollar index has actually pierced again the 98.15 level, and this is an important level because we know that this market is actually responded to this 94 level twice. So this market is still being propelled a level that is well above this 94, actually the 97, which is the current level here. And we discovered that level when we look at the larger weekly time frame here, and we know that this market has a first target of this extension at 104.57. So far, there is no indication that this market is going to move lower, and on the daily time frame here we had this market this week inverting direction, and as we can see it actually never tested the 50% level as well. So as I mentioned, for the euro dollar, I'm looking for a continuation of this price to previous highs here. Moving to gold, gold has been moving laterally here on top of a level of target, the first target of this 122.26 here. So if this market has two options here, it could actually continue lower. Remember that we are within this potential area of support, although this market has actually printed in the last 2 weeks, 3 weeks lower lows here, and there is a second target that would be below the all important 1054. That target is 1040 here. Now, will the market get there? We don't know that. There are two options: either the market continues lower or comes to trade the next measure move short here, and that would be in a retrace into 1156 here before a continuation lower, and then 1156 lines up with levels that are that traditional traders like a lot, and there are previous lows there. But the reality is that the reason why if the market moves higher would react at those levels is because of the presence of algorithms on this high volume market. Moving to silver, silver has kept moving lower here in the last few weeks, but last week it was more of a lateral week. I also mentioned this level 1504, which was actually tested with 6 ticks here away. It was tested last week, so it's not impossible to actually see this market continuing lower, and we know that there are a number of targets here that we should take into consideration in this market. And let me change the scale here, and as you can see, this market has a first target around at 14 level, but we know in this market that it can actually move much lower. And there is on the weekly time frame there is that 10 level there, but we also have a 12 40 target on the daily time frame. So we need to wait and see what happens. Moving to the US dollars and Japanese yen, this market actually has moved laterally in the last 2 weeks, and he has also traded now 4 weeks ago the 120.71, which has actually targets above. When we look at the daily time frame here, we can see that the level that we indicated last 2 weeks ago has actually traded on Monday and Tuesday last week, and there was an extension long. So congratulations to those who actually timed this market here using the Fibs token timing. You would have gotten an entry here, and this could be timed also on the 15 minutes with a freeze trade as well. So during the large move we had on Friday, we saw that this market actually has broken the old way halfway back. So a retest of that 123.80 or even the 123.02 cannot be excluded here, although clearly this market has traded the extension long here. If that extension long, which means that 122.68 is violated, remember that there is still a lower level here that would actually be observed, and then the 122.50. Moving to the euro versus Japanese yen, this market, as you know very well, I'm looking for a retrace in this market, and the reason is that I believe the weekly will only get involved in this market at 122.11. So for that to happen, it means that the euro has to actually become weaker or resume weakness, you know, and have and in a situation where Japanese yen would actually be stronger than the euro. That's not excluded here. And as you can see, on Friday, price went into that 137.11 again and was rejected. So it's not a case it was rejected from the level. The level was already in play, has been already in play 2 weeks ago. And although we're seeing this market moving higher, there is a confirmation that Auguts and smart money are actually pushing this price lower. So it's not impossible to see this market in the coming weeks and months into the 131.47. The pound versus Japanese yen, we had a similar situation here with an extension long 190.84. The low was 190.99, so it was quite a front run here, but yet there was participation around that area. Now, again, while the US dollar versus Japanese yen has actually broken the old dual feedback, that's not the case for this market. So if we get into the 192.80, there's a possibility for a continuation higher. Pound versus the US dollar, it's clearly developing the same patterns that we are seeing in the euro dollar with the retests here, and as you can see, the opposite measure move has failed at some point. Sorry, has not failed last at the end of last week, as you can see here. So it means that although this market is clearly being pushed lower here, and this level has been tested now 2 times, 3, 4, and 5 and 6 and 7 times, being retested again here, you can see that the longs have held here. So we have a much stronger short presence here, and there's also a short above recent price at the end of mid-end of June here. So there's still the possibility for this market to continue lower, but at the moment it's a lateral move between 156.31 and 155.01 there. So if it gets there, we'll need to time again and see whether that level holds again. Moving to Australian dollar versus US dollar, this market has been moving laterally last week, and when we look at the larger view here, this market is actually dipped well into this area of potential support. This is an all full range area of support here, of potential participation on the long side, and when we look at this market, we see that in the last few weeks this market has been moving lower. Now the level that identifies the second target can only be seen on the daily time frame here, and you remember that we actually used a notable anchor here, and you can see that it's not a case that the actual lateral move happens and is aligned to that second target. That's not a case, because obviously algorithms are taking profits here, and now when it comes to the next measure move, we have to remember that for this market to continue lower, it's very probable a retest of the 0.7470, and that would actually show us the hands here, whether this market actually propels up or continues lower and breaks that larger 61.8% level. New Zealand dollar versus US dollar here, we had a break here of the sequence of measure move, and when we look at the weekly time frame, we also know that this market is likewise the Australian dollar versus US dollar is within this area of potential support. This again, it's full range here from lows in 2009, and the sequence of measured move has broken there, so there is a possibility for this market to start to move higher here. And at the moment, is moving laterally. The longs, the shorts have failed, and the longs have failed too. So we have to consider the possibility of a basket setup as well. And at the moment, I'm seeing this market moving laterally between 066.89 and 066.18. Let's see what happens this week. Moving to next, US dollar versus Canadian dollar. This is a market that as if you followed my review, you should know that this market is actually being pushed higher, and it's very close to the 132.01 target that I've indicated a few weeks back. Why is that? Because this market has actually traded and respected an area of potential participation which we identified well before the fact. In fact, it's possible to identify this level with 5 weeks in advance here, and if you can see, I traced the size to high, then we had 1, 2, 3, 4, 5. The 6th week, actually, we had that area tested. So where this market is going, this market has the potential and will go into 132.01, but also has the potential to continue higher into 137, 138 here, which actually expresses the way and the speed the Canadian government is actually printing Canadian dollar to actually compete on the currency war here. So you should not be surprised if you're going to see this market at 138 very soon. And second last is the euro versus the Canadian dollar here, and on the weekly time frame, this market has traded the now 5 weeks ago the 135.92. I've indicated the 144.28 as a target. That's where we got, and now we are within this area of potential resistance. The market has not shown resistance at this level, so we are going to actually not yet. We're going to actually trace the next measured move. If the market gets into 140.10, we'll need to test that level using the Fibs token timing, and if that's successful, we could see this market continuing higher into 147.27. Congratulations to those who took the trade here and brought it to the first target after a few weeks. And finally, US dollar versus the Swiss franc here. This market has actually pushed now from this 92, 93 area here into the next area of resistance. So that's the starting at 96.60. And as you can see, we could not, the price was not strong enough to break that 097.68. If that would happen, we would be in a lateral move, and the lateral move can actually resolve on the upside or on the downside. But at the moment, that level has not been broken. So we have the potential for the short here still in control. If that's the case and a move lower starts here, this can be timed, and this could be 800 pips move here into 088. All right, so this is it for today. Thanks a lot for watching this video. I hope this video can help you in your trading, and remember that you can come and visit fibstalkertrading.com, and I'm going to send out my offer for the Fibstalker Methods Coaching Program starting in mid of September. Thank you very much, and have a great trading week. Bye bye now.